All right, as we get settled in, I just hope everyone grabbed a sandwich and a drink. Be sure to help yourself. And as we get started, I'd like to say welcome to Elevator. If you have not heard of us before, we are a magical place to grow your business. We'll get into that later, though. We would like to thank Silicon Praire News and Startup Week for sure for all of this fun stuff. And then we'd also like to send thanks to AltCap, and he will come up later and tell you a little bit more about his programs as well. So as we get started, I'd like to introduce Stephanie, and we'll get started.
Hi, everyone. I'm Stephanie Monge. I am the editor at Silicon Praire News, one of the folks who is helping bring Silicon Prairie Startup Week to Omaha and Lincoln and some places in between. So this is a great opportunity to connect with folks in the startup community who are either founders, who are startup curious, who are maybe investors or just cheerleaders in the community. We have a whole schedule of events. There are still more than a dozen events happening through the remainder of the week, including our startup showcase and pitch competition this afternoon and evening at Millwork Commons. We have a $10,000 grand prize, and you will have a chance to vote for the People's Choice Award, who will be able to receive $2,500. Yeah, that's all I got, because this is like, I don't know, 12th of 30 events. So welcome, excited to have you all here. Thank you, Elevator, for hosting. And today our speakers are from Move VC. We have Manny and Charlie, and is John here also? Maybe, and maybe John will be joining us, we'll see. But Luis from Engage Vision, right, is going to be pitching today. I had a chance to see a similar event yesterday, and it was just really fun to see some of what happens after the pitch and what investors are thinking about as they are deciding to make investment decisions. So I will hand it over to whoever is taking the mic. All right, thanks everyone.
Thanks Stephanie.
Charlie.
Yeah. All right. Yeah, thanks for coming. Just wanted to kind of set the stage. As Stephanie mentioned, Manny and I are with Move Venture Capital. We're an early stage venture capital fund based here in Nebraska. We invest in emerging technologies in Nebraska and across the Midwest. So January of last year was when we officially launched, made our first investment at the end of February, and have now made 25 investments in the last 18 or so months. 21 of those right here in Nebraska, and 4 in kind of the surrounding area here in the Midwest. What we wanted to do today was just provide a little transparency into the process that we go through, similar to most VCs, and kind of allow startup founders, the community, to see what the process looks like. So in order to get to this stage, Manny and I, we in our team, our investment committee, host a session like this every single Tuesday where we'll bring 1 or 2 founders in front of our investment committee and essentially decide if we're going to move forward to kind of final due diligence and solidify an investment, or if we're going to kind of stand pat and decide to follow the journey and make a decision on investing later. To get to the point, we really are only looking at the top maybe 10% of what we see and ultimately invest in about the top 4 to 5%. And so just top of funnel metrics, we've met with just over 500 startups in the last 18 months, again, primarily here in Nebraska, but some regionally as well. We funnel that down to second meetings. We've taken about 220 second meetings. From the second meetings, we decide if we are going to do an investment team call, and we've done about 60, or we brought about 60, 65 startups in front of our investment committee to get to the 25 investments we've made today. So full disclosure, Luis is one of them, brave enough to pitch in front of you. Didn't want to put him on the spot of never knowing the process. So he's seen the process. We invested in Luis about a year ago. Come a long way in the building out Engage Vision. And so we'll open it up to him, but essentially it's going to be about an 8 to 10 minute pitch. That's what we recommend on the call. And then we turn it over to the investment committee. There's 6 of us, and we do about 15 to 20 minutes worth of questions to really get a feel for how the founders engage and figure out kind of what next steps are. So we're going to go through that today. And then at the end of that, we'll kind of open it up to the audience if they have questions for Luis, for Manny, or myself, or kind of amongst each other. That's kind of the format. So thank you for coming, and I'll turn it over to Luis.
Thank you, Charlie, and thank you everyone for bearing the rain this morning. Let's get started. I'm Luis Marino, founder of Engage Vision. We help companies see more, know more, and do more. We help them extract insightful data from their images and videos. This allows them to power better decision making and ultimately optimize their operations. I want to talk to you about Chad. Chad spends hours reviewing footage of dairy cows to assess their health and predict yield. This process is time-consuming, labor-intensive, and ultimately Chad's work is essential, but his process is just unsustainable. So, how do we help Chad? Atlas by Engage Vision transforms hours of manual review into instant insights, helping Chad focus on what matters. Let's take a close look at how we do that. In Atlas, Chad is able to upload any type of footage from a dairy farm and instantly receive key metrics and important information, such as time codes and time events of when important things happen. With this, Chad is now essential and has a sustainable process. This allows them to reveal real-time detection, health, and performance metrics, and saves him 4 hours of his day. In addition to that, he can scale this across multiple farms. But Chad is not the only one with this problem. As the world operates physically, real-time understanding through visual data is crucial but hard to achieve. The solution, Atlas. Atlas converts imagery into immediate insights, helping industries unlock meaningful understanding of their physical world. We offer two simple value propositions. One, we unlock the power of imagery, and two, we transform that imagery into meaning. Right now, we're focused in 3 high-impact industries: logistics, agriculture, and construction. We also have a front-facing consumer product that allows us to create a marketing pipeline to uncover these 3 major industries. And in addition to that, this consumer product also allows us to test the latest features and advances in our technology. Our pricing is simple. For our enterprise SaaS, we have $50 per user per month. This gives them access to all the latest, greatest features and 120 hours of video processing. We also have an API that starts at $500 a month. This is great for industries that have existing technology stacks. For our consumer product, it's just $20 a month and gives access to all the latest, greatest features and 40 hours of video processing. We've got some great traction with some awesome organizations around the area, and we've got 3 more organizations that we will be adding on by the end of November. I want to highlight one of our clients, Warner Enterprises. With Warner, one of the things we understood was that they've got these yards all across the US. In these yards, they have bottlenecks, optimization issues, and this was the perfect use case for us to integrate our technology to help them create a digital twin of their yards, eliminating and identifying bottlenecks, and at the end of the day, creating optimized operations for these yards. Here you can see just if you see closely, we've got some numbers on there. Those are actually the ID tags on those trailers that are identified in real time and tied to a database and double checked. Just a little bit about me. I've been a computer vision engineer since 2015. My background is in human machine collaboration. I had the really cool opportunity to work on the first real-time two-way hologram call. So if you think to like Star Wars, where you see those Jedi talking to other Jedi, similar to that. That was in collaboration with UNMC. I've done extensive work on humanoid robot research, and I was actually in a PhD track, but I decided to leave that to start Engage Vision. Our ask today is, well, we know that a warm intro goes a long way, so we would love any introductions you have to logistics, agriculture, or construction. And with that, I appreciate your time.
I don't have to like you, I just need to know. Okay, first things first. It's really about traction points, right? And finding industries, communities, and then solutions, and then creating a financial arrangement that mutual parties benefit. You ended up with logistics, construction, and ag. Can you talk a little bit about why those three and where you find the traction points within them?
That's a great question. We strategically just chose those three industries. One, the ease of connections that we have around them, especially here in the state of Nebraska. Two, these industries actually are very physical in nature. So when we think of logistics, there's boxes moving, there's cars, there's trucks moving. When we think of agriculture, there's livestock, there's actual physical assets. So all these three industries have physical assets that need actual tracking. So the reason why we actually chose that, in addition, is that we're building out the technology, and we plan to scale to more industries, but we identified these three industries as a target to set the basis for scaling into other industries as well.
Can you double click on that a little bit and talk about how they're doing this today? So you mentioned, Chad's trying to count cattle and is doing this, I'm assuming, manually in some capacity. So like, just a better understanding of how Chad's doing this, how Warner's doing this today. I saw all these ID tags in this digital twin. Like, is it they're walking around in notebooks? Like, what's going on? How do you get access to that kind of information?
It's insane to know that there's actually teams, dedicated people who sit there and review video of whatever industry we might have. In Chad's case at Standard Nutrition, we've got dedicated consulting teams across the nation who come into these farms to just sit there though and watch and review these video streams. With Warner, a lot of it comes down to the operational team as well. And really, at the end of the day, it's just people sitting down on chairs, watching a video stream, clicking through it. We've all done this, and we know that it's time exhaustive. If you take a video of your kid's birthday party and you wanted to know what kind of gift someone gave your kid, you're going to go back and review that video, but it's going to take you a moment. So really, we're cutting out that, taking a seat and putting hands and eyes on actual video streams and automating that process to be much more quicker.
Do you have metrics on the accuracy? I mean, I have to imagine manually counting cows that are moving is not as accurate. Me sitting there watching video is something like this. Like, do you have any kind of metrics on that yet?
That's a great question, and I'm glad you asked that question because we do a lot of tests often to measure our accuracy. In counting in particular, we actually score higher than ChatGPT and some of the vision APIs out there. The way we do it is really, really unique and really cool, but we're always measuring the accuracy of these models and of our output. At the moment, we rank up in the 95 to 98% accurate. However, we are using human collaborative. Our users always double check everything. So we know that we are in the right. And of course, we always have those edge cases where we miscount or don't get something right, but we're working towards having better accuracy always.
Just a quick question on scale, because this is valuable, but in order to really reap the financial reward, it's about the scalability and the repeatability. If I have 100 truck yards, are there any challenges to the scaling of the software?
That's another great question. Right now, the biggest deterrence to scaling is just the compute cost. We know that any AI technology is costly on compute. We're working to decrease those costs and bring those models to the edge devices, such as phones and on-device computers. But right now, it's really that compute scaling factor. So with some of our larger customers, they've got the resources to extend that way, but we're really trying to bring that metric down to scale it even further.
Is your model custom, off the shelf, some kind of hybrid? Like, can you talk to me a little bit about how your model's structured?
Our model right now is hybrid. We started off with kind of off-the-shelf models. Since then, we've done a lot of data collection and just training of our own to the point where our models are more accustomed to what our needs are. And that we're not going to be able to compete with the Metas, the larger research open AI systems that are pouring billions and billions of dollars into these systems, of course. But we use those systems to fact check and have guardrails for our models. So it's kind of a hybrid system today of our own models in tandem with those off-the-shelf models.
So then the follow-up, if you have this hybrid or kind of custom internal, can you talk to me a little bit about the data privacy or the actual individual kind of personal information that you might be collecting in some of these cases?
Yeah, it's case by case. It depends. We work closely with our clients to really understand what data they need and how that aligns with data privacy. We do a great job of always unidentifying any unique behaviors in individuals, actual humans. We kind of extract out, we come a level up in just understanding those objects and what those objects are. But it's case by case, depending on what the client is. And of course, then we build the guardrails around them, depending on their requirements.
Quick question again, back to scaling. And as you launch and have multiple opportunities, what kind of team building will you have to do? In other words, what are the categories and the types that will make sense for you as you scale?
I think the most obvious answer, of course, is always adding more developers to the team. The more developers you have, the quicker you can ship product. But of course, one of the things that's very unique about us is that we're dealing with the physicality of the world around us. So really, we need a lot of sales and marketing people that understand really those physical, traditional company types, such as logistics and so on. So it's a little bit of getting the right developers, but getting the right people that can do a great job understanding the end user. So that's really how we think about building our team.
Come back to product just a little bit. You mentioned in the Chad situation that he was able to essentially, I guess I'm just trying to understand what's the usability of the product. So Chad is uploading video, and then you said he was able to get answers. So what's the process? Is it hands-on? Is he able to ask Atlas for stuff? You have to work with the team on the back end. Like, is it customizable? I see on the videos there's lots of other opportunities of blurring or tracking or heat map. Like, just kind of talk to me. What can the Atlas do, and how much of it is in Chad's hands to do it?
Great question. So with Chad right now today, what we're doing with them is we actually give them an AI agent assistant that helps them walking through all those videos that they have to review. With this, they have the ability to integrate with their Excel systems, some other dashboarding systems. So it can go both ways. It can be really hands-on, where it's a collaborative effort between Chad and our product, based on an LLM interaction, or it can be all automated, where Chad just presses a button, uploads a video, and gets a report back on his Excel sheet. So it's a little bit of both. It's, again, use case, depending on the user and what they want. A lot of the features that we have a library of features, of course, and we don't want to give all the features to every user because we're going to overwhelm them. So they have access to these features as long as it's something they actually need. So we might not give Chad something like a blurring out a cow, because why would you want to blur out a cow in a scene? As opposed to someone who's working in privacy, they might want to blur out a specific object. But Chad would use some of those other heat mapping features as well.
Do you end up calculating the value for the client? In other words, do you determine this offset so much human time, this offset Is that something that the clients ask about?
That is the number one ask, is really what is the outcome? What is the metric? Are we decreasing their time? Are we decreasing hands on deck? So really that is one of the answers that we try to identify and answer even before we give them a product, of understanding, hey, we can cut down 200 hours on your team's side just by giving you this platform. In the case of Warner, it's a lot of, we can cut down 15 minutes per every driver that comes into the lot to process and go find their actual parking lot or their maintenance dock. So a lot of it is time-based, but yeah, that's one of the questions we answer right off the gate.
How did you get started, and how has the concept changed over?
Great question. I think I have some. I started off Engage Vision with the retail space. We were looking at retail intelligence, really at the brick and mortar retail, really trying to replicate some of what was going on in e-commerce. E-commerce, you go onto any website today, they know your size, they know who you are, they know all these data points. It gives them a really great story and a really great understanding of who their customer is. When we look at the physical retail space, there's not really a solution that does this. There's a lot of great solutions that are hardware based. And what we wanted to do was, hey, we know that these retail stores already have security cameras. Let's see if we can pull these feeds and generate some awesome insight from that. That's how we started. We went into doing some event tracking. After that, tried sports. Sports was kind of challenging with some of the pricing models, but ultimately kind of landed here where we are today.
You mentioned something there that I hadn't heard yet, but so no hardware, so you can plug in existing. So I'm just thinking of, the next Chad, the next industry. It's not dependent on any kind of physical hardware. You plug in with existing footage, and are able to take that. Like, have to be security cameras, certain like. It looked like Warner was drones. Just kind of talk to me a little bit about that.
Yeah, that's one of the number one thing that sets us apart, is that we don't do any hardware. It's all software. So we integrate with what you already have, whether that's a security camera, whether that's a drone or a phone that you have. So that's one of the things we pride ourselves in. If you look at the competitive landscape, a lot of the competitors are shipping actual hardware components to you, and we just don't get into that side.
What will your cash burn be in 2025?
That's a very good question. Our highest burn will be, of course, team. Second to that will be development and compute cost. We are actually working in the process of working much closer with Google and offsetting some of those compute costs for some of our clients and for our development. So I'd say it's really those top three things: the team, the development, and the compute.
You have any fundraising plans soon?
Fundraising plans? Yes, we're actively fundraising right now. We're looking to raise here in Nebraska and in the area here until up to the upcoming year. We're looking to do $600,000 initial pre-seed round to cover some of those team costs and team building and really kick us off in the right spot to scale with some of those enterprise users.
Thank you. That's good.
Yeah.
We'll open it up.
Yeah.
Thank you.
Yeah. If you have questions for anybody in the group or.
For you guys, so he's coming with a product that is multi-industry since it's a technology. How does that impact your decision making compared to if you would come in only as like for trucking with the Werner value proposition with the time saved per truck? How does that affect your decision making?
Well, we always look for a primary traction point, because that's the industry that's going to provide the most information on return. And then you ask the follow-on question, which is, what are the ancillary or the adjoining markets that are available? We're always trying to find a specific community and a specific problem to solve. But once you have that, is it industry specific or how can it be replicated? So it's a good question. We always look for one, but we're looking for the additional one or two that would immediately be available within a 2-year time frame.
Does that change as you would go through different investments? So earlier stage you can be wider, but as you would go up in rounds?
You know, there's the old CAC versus LTV for those, you know, the cost of acquisition versus the lifetime value of a customer. And from industry to industry, that will change, but also as the organization matures, their capability to do that changes. So that's just something we keep a tab on. And we might come in as partners. We love telling people we're your partners now. We love it just helping them make that decision, because sometimes it's very difficult to leave a comfortable place for something that appears to be more valuable, but sometimes you have to step off. So,
And I'd also add, Luis's with Engage Vision is kind of in a unique spot where having an individual industry, to Manny's point, is like pretty interesting because you can just get the expertise. I think we're in a really unique position with the amount of video, data, images that people have been capturing that have no idea what they even can do with it. And most industries aren't allowed to like delete them. Like they're now corporate possessions, so it's just taking up a ton of storage. There's too much to even analyze. That one of the things that we thought was interesting was Engage Vision's ability to consume anything and then interact with a large language model to essentially, people want to use computer vision, but there's not enough computer vision engineers to even tell them what they could be doing with computer vision. So it's almost can be a gateway to unlocking some of it that we thought was pretty interesting.
historical mining will be very interesting in this space.
You mentioned retail, trucking, and what was the other one? The agriculture. Is one of those low-hanging fruit? That's the first part of the question. And then secondly, is there any like testimony marketing material that would tell that story of value saved or money saved or percent labor hours saved, like a one-sheeter in each of those industries?
Yes, I would say that some of those are, we could say low-hanging fruit in the sense that the industry is abundant with problems that require computer vision. That's in that sense, yes, it's low-hanging fruit. With some of the other use cases, we've got plenty of documentation out there and like marketing resources to give to anyone who wants to learn more about some of those user stories. So we're really happy to share at any point. We've got some great use cases and not just construction, agriculture, logistics, but we're always open to working with people around the area in any type of scenario that might require our expertise. And so we're always exploring with that consumer level product that I showed. That is the point of that, is to kind of highlight some of those use cases of, oh, we could actually do this with Atlas to really build a marketing pipeline.
So you mentioned that you don't do a lot of hardware stuff, but I'm curious about specifically things like infrared cameras and other sorts of visual systems that might be interesting and might augment existing technologies in a way that might be more valuable than, say, efficiency of counting a cow or something like that.
Yeah, really great question. One of the things is that we're always looking to work with people who have their own hardware already, and that hardware can be anything from a camera stuck on a wall to a drone flying up in the air. We're always looking at kind of the use case of what these technologies have, and really one of the features can be counting a cow or can be counting a car, but really we try to add extra layers to that our users haven't thought before, such as a great one is knowing how many times a cow goes and sits down is a really good indicator of their health. For someone to review each and every cow of how many times they go and sit down, that's exhaustive. If you scale this at just 5 farms, that's exhaustive. So that's where some of the hardware comes into play of just putting a camera there, and where our technology really shines in adding that extra dimension of data.
Could you speak more about the competitive landscape and specifically, you mentioned software only, and the opportunity? Like, how are you differentiating or protecting against, kind of bigger players in the same space?
That's a great question. Right now, the competitive landscape really looks. There's a lot of new players coming in every single day, but they're really honed in on a specific niche. Some are honed in on just retail. Some are honed in on analyzing when players for football bend an ankle. So like very, very specific. The way we're looking at it is kind of twofold. We look at a few levels above an overall picture. Of course, this leaves you out to not really hone in on some things, but that's all right because there's a lot of opportunities out there in applying these technologies and these solutions. To your point of, yes, 600,000 sounds modest. We're not looking to get more than we need. We just want to survive a couple more months. And really unlocking that capital will unlock some great enterprise level contracts for us that we think will give us a pretty good runway and set us up for continual success.
We'll help him with that level of humility. It's just not necessary. Right?
I have a question about pricing. So how do you price around, especially early seed? How do you compare maybe the traction that's already been made versus the opportunity?
It's like really hard to price around. And so we almost never will invest on a priced round. We will only invest, to date, we've maybe done 1 or 2 priced rounds. We typically invest on a SAFE, a simple agreement for future equity. So it's essentially a way to kick the can down the road until there's, when you have such small numbers, it's hard to figure out, is this a pattern? And so a way that a SAFE works, there's usually 2 ways that you can, quote unquote, price a SAFE. And Ben Williams and I talk about this all the time because we treat a SAFE cap here in the state of Nebraska like it's a valuation, and it's not, but I understand why we do it. So essentially there's 2 things that are kind of negotiable on a SAFE. There's either a discount or there's a cap, or there's both a discount and a cap. So oftentimes you'll hear something like, oh, I'm making these up, I don't have them in front of me, but it's $600K on a $4 million post-money cap with a 20% discount. Okay, so what does this mean? We're not pricing the round. We're going to try and raise $600,000. And then in the future, when he does raise a priced round, we either get a 20% discount on that priced round, or our shares convert at the $4 or $5 million post-money cap. So the idea here is it incentivizes investors to get in early without sitting here and negotiating multiples on a number that doesn't make sense, because it's like, okay, you have 4 enterprise customers that are this much, but like if you pick up 2, you've now like, if they're substantial size, like you've grown by like 800% in like 15 minutes. Like how, we can't price this. And so like that's super, super standard across just the US. You maybe hear of SAFE or a convertible instrument, like a convertible note. So the difference, we invest primarily on a SAFE versus a note. The only difference is a note has debt, or it's an interest vehicle that can be collected in. If he doesn't convert, we could ask for interest back. Manny and I aren't interested in making money on someone's interest on a loan. Like, we either want you to go be successful and blow this thing up, or we want you to like die trying. And so the SAFE is just a faster way with no debt or interest associated with it. And then it's another reason why we align so closely with the founders is our investment doesn't convert to equity until they raise that priced round. So the first sets of investors that you take onto your cap table are the closest aligned to the founders than any real round that comes in. So all of that being said, we still have to figure out what is the discount, what is the cap. 20% is standard across that's the expectation that anyone would put a 20% discount on a round. So if we have a discount, that's what we do. The other piece is then deciding on what that cap is. It's similar to like what Ben was talking about yesterday in Lincoln, and if you weren't there, is we have to see a path to this thing 2-3xing every 12, 18, 24 months. And so we don't want to price around or put a cap on something that is going to convert it technically wouldn't convert, but the math of it is you don't want to put something, a $10 million cap on something if we know in 12 months it's going to raise at 5 million, because now we just convert at 5 million. We always get the better deal. So it's really kind of figuring out and comparing regional by regional what it is. Like a YC safe, if you're out in Y Combinator, it's like almost always like 12, 15, 20 million dollar, cap. They're playing a slightly different game where investors are willing to take that, but it's also why anything that's not a $5 billion company is a failure in their mind, because they have to get the right multiple. So ours here traditionally pre-product, maybe $1, $1.5, $2, $2.5, $3 million cap. If you're post-product with revenue, it's probably in the 2, 3, 4 post-money cap. Post-money, pre-money just being the value before you take investment or after you take investment.
And just a commercial from the old guy. Much of what you're hearing is reflective of our culture, where we lie in the country, where we have been as a state, and where we've been as a group of investors in the state, has been a bit risk adverse. That is changing, and it's changing very quickly. You're going to be part of that, and the folks in this room, if I look at average age, and I get to talk about that stuff because I'm the old guy, it's going to change, and so be aware of that over the next several years, that there will be more risk taken, more rewards provided, and failure. We always talk about you win or you learn. You never really lose, right? And so it's that whole issue of risk aversion does cause some of the, as Charlie just discussed, it's a very safe way to proceed. But some of that will change. We believe some of that will change when we see 2 or 3 additional seed groups. We have very few in this state. We expect to see 3 or 4 new seed investors even in the course of the next couple of years.
If anyone was over at Millwork this morning, the one piece, and Manny bringing up the failure, that I think is interesting is that it's not just that, like, the failure in terms of it shutting down. It's that oftentimes we see here, because of the risk aversion, because of you get sometimes only one chance, things that are clearly not going to work, we drag them along for like 3 years or 4 years, and we've just lost a brilliant entrepreneur because it was they think they have this one chance to do something when it's obvious to everyone else, shut this thing down and we will back you immediately on your next thing. But that's the piece on the failure piece. It's not just that failure is a bad word, but because of the mindset that we might not get another chance, we string along bad ideas too long, and bad ideas are great. Like we talk about bad ideas as like a badge of honor, not like, why'd you think of that? It's like fail fast, move on to the next thing. The very first thing that we did before we wrote our first Check It move is we wrote the blog post for our first founder that failed, that we immediately gave them a second check, and it's already written, teed up, and we're going to put their name in it and say, this failed, this is why we invested in the first time, they got a second chance right now. And so that blog post has been, we haven't had anyone fail yet, but that blog post is ready to go, and we're ready to back whoever we believed in.
I've kind of asked a question about the pitch itself. So you guys didn't really ask a lot of questions around market fit, total addressable market. From my perspective, when I'm trying to put together a pitch, I'm really aggressive trying to establish that there's a business case and we can make money. And you guys really just didn't ask me those kind of questions. And I'm wondering if that's common or if there's something unique about this particular pitch, or am I just smoking crack by focusing on that because nobody really cares about that one pitch?
I'll let Manny answer it, but I'd say the one thing, we don't just like pull people off the street to pitch to our investment committee. So we've already had 2 or 3 meetings. We've already done some due diligence. Like if the market's not there, they'll never even get to this step. So we've looked at TAM. We look at TAM totally different. Like I absolutely hate when a founder will come in and say it's a $7 trillion market, and if I can just get 1% of it, because it's like, great, I don't understand what this means at all. And so like, the example that we love to see is for you to like stair step us through. By the end of 2024, we'll have our 10th paying customer. Our 10th paying customer gets us to $5,000 in revenue. We're going to have, we'll be able to step this up to 1,500 paying customers. We'll be at around 40K in MRR, midway through 2026, and that's when we really shift into gear, and we'll double on the back end of 2026. And we always talk about it as a bottom-up TAM. How quickly can you get to your first customer? How quickly can you get to $100,000 in revenue? How quickly can you get to $1 million in revenue and $100 million in revenue? And it's like, I don't I'm never going to check your homework and go back and be like, oh, you lied to me. It's more just this mindset. The one example I use, there's a brilliant woman that we invested in out of Chicago. And one of the things that was really interesting to us is she laid out how she had 25 people, paid pilots, had already converted 23 of them so far in the paid pilot process. And she laid out how she was going to acquire 50, 100, and 1,000. And she talked to us about, once I have 2,000, I'll have crossed 100 million in revenue. She already had 25. The path to 50 was pretty clear. 2,000 seemed like a really small number. I was like, this is an interesting TAM. Like, we didn't even have to know the industry, but I was comfortable with how much she could capture of it.
I'll just reinforce, you're absolutely right. That's exactly, and because this would be a third meeting, we've kind of been there, but you're absolutely right. And to reinforce what Charlie said, we're just looking for that logical ladder to success. And it does start with market identification and fit.
Okay, just a follow-up question. So since you guys are not interested in just the market short kind of at this point in the process, what exactly are you looking for from the founder in this moment? Are you looking at a compelling story? Are you what exactly are you going? What do you want to see from the founder to go, yes, I want to move this to the actual investor board and pitch?
I have a similar question too. But if I may, because that's a really wonderful question. I was looking for what characteristics give you the confidence in the people that you choose that you're ready to write them a second check once they fail? And conversely, what are the characteristics that are the stop in your tracks no?
Okay, I'll do the first one, you want to do the second one? So talking about remind me how you phrased it the first time, just the.
What are you looking for in this moment?
In this moment. Yeah, I mean, so a lot of this is, we have 6 people on our investment committee with various backgrounds. So a lot of it is, we've maybe validated it, someone's looked at it from a technology and a product perspective, someone's looked at it from a fundraising, operations, and market perspective. We now want to get them in front and see how they answer questions around financial modeling. Like, you'll notice from the types of questions we ask, Manny asks a lot about the scalability. That we get that kind of question. Like, someone like Alexi on our team will often ask a lot around the financials and like the actual pieces there. John dives really deep into the tech. Who's building this? Ben will start thinking about different exit opportunities outside of like IPOing. A lot of the questions I will ask is around like, what's this market look like? Where can we get you plugged in across the country in order to, until we have more Series A funders here? Who do we know? Who do we have immediately in our network that we can connect people to and build our credibility with them and get them good deal flow? I mean, I don't know if Manny wants to kind of touch to this, but.
Yeah, I think you mentioned all of it. I would maybe use a football analogy just to keep it really simple. We want to have a playing field that's valid, right? There is a market there. We want someone who can see the other goalpost at the other end of the field, but we're really interested in how they're going to get from the 5-yard line to the 10-yard line, because if we could see the trajectory beyond that, it's easy. But getting those first few steps in and knowing they can be successful at that is the most important early stage.
In some of the characteristics, I mean, some of the things like, if you've been a founder before, interesting. One thing that we talk about internally, if we had 2 founders side by side and one was extremely successful on their very first startup and one failed on their very first startup, all things equal, we would pick the person who failed immediately and pass the person that was successful. You learn so much more from your failures. You take way too much credit for your successes when it happens to you the first time, that you don't actually recognize all of the variables that fell into place accidentally. So like those types of things. Complementary skill sets. We have all these kind of check boxes of things we look for. And then it's like, well, did they hit enough of them? Because it's like, I'm not very interested in investing in like a solo founder. Well, like 6 of the 25 we've invested in are solo founders. And it comes down to like, well, this person is like an absolute grinder that's gotten this far with nothing. Like, what would a little bit of money do? This person, I have no doubt, can recruit customers. They'll have zero problem recruiting, someone for some equity to come in and fill a gap. But if there is a team, what's the complementary skill sets that the team has? We really look at 3 things: product, customers, and the actual team. And so That changes based on the stage that you're at, of course. But a lot of it comes down to, is this founder somebody that we're going to back? Obviously, the blog post might not go out if they failed because they committed a felony or something. We'll probably readjust our mindset there. But for the most part, we're looking at somebody that, solving a problem, oftentimes that they're familiar with. The two questions we like to ask our founders all the time, why you? Why now? Those are the two things. Uber's a perfect example. GPS being on everybody's phone at the same time that they wanted to start that sure helps that business, right? No one had up to that point thought taxis were the best solution, right? And so there's just kind of making sure, and we can learn a lot asking why you, why now? Because do they understand their market? Do they understand their product? Do they understand their customer? Do they understand their gaps as a team? You're gonna kick us out soon, Emily? I didn't even look what time it is. I don't know if it's...
I mean, I have another question, if you don't mind. This is kind of a technical question about your guys' job. I've wondered because I've tried to find you from a couple different places and obviously. But I've often wondered what you guys do on the back end to say, okay, we made 25 bets over this last year. Which ones did we get wrong because we should have funded and they ended up being successful and we missed that? I'm just kind of curious, how do you guys look at that and evaluate that? I'm just curious, I think it's, from my perspective, it's an interesting question if I was in your guys' shoes. I'd be trying to figure out how do I measure that, basically.
Well, first of all, I'll tell you, I'm frightened right now because we haven't had any downside yet. That's very unusual and maybe not healthy. But I think it also goes to the fact that this physical geography had been untouched for a long while. And so I think we're benefiting from that. We have to be mindful that's not forever. And so that's part of it. But also just, expecting that that's part of what occurs. I'm like the best boyfriend in the world, but, I've been married 3 times. So I know the adjustments, right? So, but the point being is experience does help a lot to understand where the probable failures are going to come. And calling them early is the other thing. If you don't mind, Luis, because this is open forum. Luis had a situation early on in his team that was very difficult, but the fact that he stood up, handled it quickly, made the changes, made a world of difference to us and allowed him to continue on and see additional investment.
When we track, we have templates that all of our portfolio founders, we ask to use in terms of monthly updates of just things that we're tracking internally so that we can essentially just run some numbers on hey, this is how much money they have and this is how much they're spending. Hey, you're going to run out of money. What is the plan? And start talking about fundraising before you're out of it. We encourage any founder that we do end up passing on to continue to send us these same updates. Manny and I are not, our ego doesn't get in the way of a good idea, and we'll be the first one to say man, we really missed this, and we'd be interested in following on. Alyssa from our team does a phenomenal job of any investor or any founder update we get, we very much read and track, which would be one piece of advice. If you're building something, if you don't send regular monthly updates to your investors or to potential investors, the assumption is your startup is dead. That is just the assumption, because they die so fast. And Craft Ventures has a great slogan. They said, every founder knows if you don't send an update that the investor thinks you're dead. So if you already know that and still don't send an update, that's probably even worse than being dead. So being open and communicate, the part that's really hard is you spend 120 hours a week on your startup, and your investors will spend 15, 30 minutes prepping for a call and 5 minutes reading your investment update and hoping you'll reach out when you need something, if they can help. But everyone's not in your business 100 hours like you are, and it's really, really hard to sometimes separate yourself from that, to recognize that everyone doesn't know all the details about everything you're doing.
You can't over-communicate.
Wow.
To Charlie.
Awesome. Any other questions? Anyone? Okay, I'm going to take that. Thank you. Wow, let's give them a round of applause. That was amazing. Thank you guys so very much. As I mentioned, we will have Marcos come up with AltCap. If you haven't heard of AltCap, they are a company that provides funding for small businesses.
So I'm market president for AltCap, Alternative Capital. It's a community development financial institution. We're also a CDE, community development entity. I'll explain briefly what that is. We are a SBA preferred lender, so we follow SBA guidelines. We love partnering with banks so that when businesses are not able to acquire lending from a bank, then we step in. So we're also love partnering with venture capital. Three areas that we have is lending. We have multiple products all the way from AltCap to AltCap Express, all the way to minority construction programs. We also have a technology fund, but that is our focus. But we also do impact investment out of Kansas City, which is fundamentally a venture capital, but with much more higher risk, similar to Invest Nebraska. But we have private funding. And then the third one is new market tax credit. I won't go into it, but it's fundamentally real estate revitalization investments in low-income areas. So that's what we do. I have an office here. I've been in Omaha since '91. I worked at U.S. Bank Community Development for 12 years, almost 12 years, and then got the opportunity to join AltCap, focusing in Omaha and Southwest Iowa initially, and we are investing tremendously. We're very excited because 2025 is going to be a growth year for us, and we're looking forward to working with them, several other partners in the area, and so we're close partners with Elevator. I'm a personal investor, as well as helping them grow to Des Moines and Kansas City. So we're interested, I am interested in the community, small business, and a wave to BC Clark, because last month she's on the contract with AltCap to work on the technical assistance, business development as a SBA consultant. So thank you. I'm here. I've got my cards. Would love to talk to you if you have any questions. And if you don't mind, I will email all of you a brief thanking you for being here since you signed up.
All right. So we have free co-working this week if you'd like to sign up, powered by Startup Week. So be sure to go ahead and sign up. And then, of course, like any business, we love feedback. So if you could pull out your phones and give us some feedback for your elevator essentials today, we would love to hear it, good and bad. Be sure to just go ahead and scan the QR code. And if you have not heard of Elevator, as I said, we are a very magical place to help small businesses grow. Besides for space, we also have more training and resources and programs just like this one monthly. But we do also have space starting at 81 square feet available. If you would love to have a tour from Leah and I, just stick around or grab us, and we would love to show you around and tell you more.